Hello everybody, Papa John here to tell you stories, share lessons learned and provide you with some information to make your journey through the crypto landscape a bit more enjoyable and profitable and safe. Today we're going to talk about tax. Unfortunately, unless you live in a tax haven, you can't avoid it. Okay, the taxman cometh. There's only a few things guaranteed in life: death and taxes, really. Unfortunately, it's a convoluted and ever-changing landscape, tax, depending on what country you're in and how much you spend, earn, invest, etc., etc. If you're employed, self-employed, just an investor, etc., etc. But one thing to bear in mind is pretty much every transaction you make or conduct in cryptocurrency is taxable, one reason or another. Even if you just change your BTC to ETH, it's counted as a taxable transaction. Okay. One thing I did right from the start, and I'm glad I did, was keep a diary. Keep a diary of everything you do in terms of buying and selling, trading, withdrawing, depositing, etc. Most exchanges that you join, hi guys, will be able to download CSV files, Excel files, transaction histories, etc. So some of them are restricted to 2 or 3 months, some of them will go back further. So it makes it difficult when you come to actually compile a tax assessment or submission. I employ an accountant. I just didn't want to spend my life, or a good portion of my life come the end of the tax year, recording everything and reporting it all. And that's what professionals are there for. Obviously you pay a ticket for it, but to me it's worth it. Peace of mind. Stressful enough sometimes in investing in crypto without getting stressed over tax. With all things in life, it is possible to do it yourself. Essentially, if you're just buying and hodling, it's the easiest scenario because you're not actually selling anything. But be careful again. If you think, right, I'll buy Bitcoin, then I'll trade it into Cardano, for instance, and stake it. Well, you've got a number of transactions there that are taxable. So you really need to bone up on the rules and regulations in your country or jurisdiction. In the UK, the income tax rate for staking, yield farming, interest in your Celsius or Nexo account, anything like that, mining, I get regular mining returns, that's counted as income for tax purposes. Annoyingly, I would probably get taxed when I sell my Bitcoin as well, so I'll get a double whammy there. But just be careful what you're doing, keep a record, pay an accountant if you can to do it all, cover your back. You don't want the taxman coming your way in 5 or 10 years saying, where's all this tax at the US? Remember, everything's on the blockchain, and eventually some smart developer or genius will work out ways how to pull all your transactions forward, and you'll have a full transaction history, which if you haven't submitted in a tax return, you'll have some questions to answer. There are some countries in the world, I think Portugal has a good tax regime for cryptocurrency. A couple Caribbean countries, Puerto Rico. Quite often though, get pros and cons. I know Crypto Crow is a YouTuber. He sold up everything, living in Cincinnati I think it was, went to Puerto Rico. He lasted 6 months, just couldn't stand the lifestyle. Everything was a bit behind the times and poorly developed country. Sure, he didn't pay anything or much in taxes, but there was other prices to pay. In the end, he went to Florida. I gather that the mayor of Miami is a big Bitcoin man, so no doubt it's crypto friendly. So if you do your research, there's plenty of countries around the world that will be more crypto tax friendly, but majority of them, the governments are out to squeeze as much out of us as possible. So just be careful. You might not think you're transacting and creating a taxable event, but any transaction is likely to become taxable. One thing to bear in mind, if you're cashing out, if you're taking profits, set some of your profits aside for your tax bill in the end. In the UK, capital gains tax is 20%? Oh, I can't remember. That's why I get an accountant to do it. So you need to hive away a portion of your gains, put it as USDT or USDC, a stable coin, or into a yielding an account like Celsius or Nexo, or if you fancy crypto.com or BlockFi, whoever, somewhere where you can at least get some interest or yield on it whilst it's sat there waiting for the taxman to come out. Bear in mind the big tax on that interest as well, or yield. Okay. So that's about it for today. Hope you've found this helpful. Definitely do your own research, find out what the tax laws are in your jurisdiction, or find a good accountant to sort it all out for you. Okie dokie, shall leave you to it. Today's going to be a good day. Bye.